Good afternoon, traders. It's Mark here from the day trading room. The time is 20 to 7 in the evening, London time, and it's Thursday, the 10th of February 2011. First video for a while, first day trading for a while. I posted the reason why on my blog, thedaytradingroom.com. But now I'm back, and first day back for a while, I will take it steadily. I will be careful. I will immediately reduce my size. Not only because it takes a while to get back in tune with what how the market is moving, the pace of the market. I mean, for example, the oil market. When I was last trading, it was when we had that run from the low 86 up to the 92 over those couple of day periods. The Egypt news was just kicking off, and it was creating a bit of a panic. So the trades we were taking, as you saw from the videos, were more waiting for the pop, looking for that last flush, and often getting that third or fourth flush, which you very rarely get except on extreme days. Trading it based on that. So the range is reduced in oil. It's calmed down a bit. The volume's lower. The average true range is starting to decline now over the day. So it requires a little bit different approach. You start to then put your continuation trades to one side, or if you're going to take them, you make sure you're in nice and early. You're not taking at the end of a trend. You've got to be more aware of your levels. I mean, where we're talking about that good bull run, last at the beginning of February, end of July, end of January. It was pushing on, and you could take the continuation trades and keep taking them, and they were the most profitable. But being more aware of the situation we're in, being more aware of the market pace. So it takes a while to get back into it. So I automatically reduce my size. Get a feel for how the Dow's trading. Are we trading relative to the ES? What are the key levels? You can look on a chart and get your key levels. And yesterday I spent a lot of time running through and going over the levels, going over the pace of the market, going over the average range we've had, going over the highs and lows, going over whether the 5 p.m. London time frame has been any use, going over to see whether the cycles and the 3-minute cycles have been working. Just get a feel for it, but you can't get the right feel unless you've actually experienced and get back into it. And just for me, just being cautious, just scale back the size, and just spend a day, picking out the odd trades and just see how we get on. The last thing I want to do is come back from a break, all guns blazing, full size, and without being aware of the pace of the market and the phase of the market and the type of market we're in. So with that said, let's run through some of the trades. Today was a poor day for me, literally because I didn't feel in tune with the market at all. I took trades that were okay, but I didn't have the confidence to run them, and that really was because I didn't feel I had the pulse of the market. I perhaps should have held back a little bit more. I have reduced my size, so we're not talking any problems or anything. And I'd made a couple of great trades, but too many losers for my liking. The percentage win rate was well low today. But this is a blog. This is about sharing the good and bad, and I don't expect this to be the norm by any means, but you get days like this, and the important thing for me has always been to notice when you're not in tune with it. It happens. You can be the best trader in the world, the best traders in the world out there still have off days, as people do in any profession that they're at the one that they're doing very well at. But you need to be aware of it. There's no point in keep pushing away, pushing and doing the damage. Just take a little step back, just take a few breaths and then just review. And that's what happened for me really. My last trade of the day was about 3:30 London time, and I just shut things down. Just not shut things down, but just locked the platform in terms of execution, and just watch. Just get a feel for the market again, get back in tune for it, and realise that it's not quite going as it should be, but making sure there's no more damage done. So with that said, let's get on and review the trades that I took today. Zooming in the 1 minute here. Oil, first couple of trades. I took a couple of trades on the Dow, I took a couple of trades on oil, and I took a trade on the ES. Actually, I took 2 trades on the ES, and I ended up scratching them both. Something like a 1 tick and then 1 tick profit and 2 ticks loss, and so calling that a scratch on the ES. And really, again, it came down to the confidence issue. Didn't feel I was in tune with it, even though they were great trades. Both of them were spot on in terms of the call. Didn't have the patience to hold them. And that's the trouble. That is the trouble. So right, let's get on with it and then talk about some of the trades. This trade, right, premise behind the first trade on oil. I took the short here, looking at the overnight, well, the prior to the 2 o'clock, the 2 o'clock time period. We had a good low there at 86.18, some nice support. You can see. Um, I saw that break just after 2 o'clock. Saw that break, saw some good volume coming in, and it broke. And so I just thought I'd wait for a little pullback. Got a pullback to 86.18. Thought great, that's a perfect place to hit the short. Took the short there, and within it's probably 20-30 seconds, plowed straight through and took me out at 28. So 10-cent loss on that. And why would I use such a tight stop? That's something that I wanted to have a little chat about, and probably now's a good time as any. Why do I use a wide stop sometimes, and sometimes I use a short stop? It depends on the setup. You'll see days where I'll be using the same type of stop because you'll be using the same type of setup. If, for example, I'm looking for that continuation trade, a break, and let's say that's a key level, a break, a pullback, and then a trade, we don't need to use a wide stop down here for it. We can use a stop. We're waiting for it to continue that little push on, and our entry is going to be around here. I talked about that before. We can afford to have a tight stop. There's no point in risking more because the trade's negated. Whereas if, for example, we're using say a cycle, let's say that's a stochastic, for example, on a 3-minute chart, it's something I like to look at, and the market's been oscillating up and down, and it's pushing up, and I'm perhaps looking for a pull back to go long on. Actually, no, that's a bad example. Scrap that. I won't edit it off. I'll leave it in just to show you. Let's use a better example. Right, a good drive up. I'm looking for that deeper pullback. So the same with the stochastics. We're talking that's an overbought, rolled down, oversold condition. There's your stochastics there. Very bad drawing, but I'm sure you get the idea. And then I'm looking for that long, on the oversold condition, looking for the continuation of the trend. There I will use a large stop because it's harder to pinpoint your entry. Sometimes you may get lucky and you may see the selling shutting off. You may see a tape buyer coming and helping your cause, whatever, and that may give you the ability to use a little bit of a tighter stop. But generally you might have to use a stop down here. You might have to use a little bit more of a stop so you don't get caught in the noise. But it depends on the setup, as I say, and those setups where you're looking for the momentum type trade rather than the pullback and continuation, as in this example. If you're looking for the momentum, the pause and push, it makes no sense to be using a wide stop because the trade premise is based on momentum. And if the momentum was stopped, you don't want to be in the trade. So that's why, sometimes I'll take a larger stop. I'll use a larger stop. Sometimes I'll use a shorter stop. In this case, nice tight stop. I was looking for that momentum. Little pullback, get short. Didn't happen. Stopped me straight out. Great start to the day. Not really. Second trade for me was this. We had this little pattern here. I'll just draw in here. Nice little uptrend. We're banging our heads against this level several times. I just seen the fact that this was the 50% pullback level here. I've talked about that before. Half of the total move pulled back and then a drive on. We struggled again, but when I saw this is the interesting point here. The consolidation near the high, it didn't pull back vigorously. So there's two ways of looking at this. You're either going to push up, and then it's going to take out lows, or in this case it pushes up, retests, but then holds. Now if you've got that situation, you can assume that the selling is not as active. They're not sitting there waiting. And when I saw this candle come and retest, it was a good candle. It's the biggest candle for a while, looking on the 1 minute. The volume was slightly larger than average. You can just see down there, slightly larger than average, and definitely larger than the previous candles. That for me was a long, and I'm just looking for that pop. Stop again underneath that candle. I can afford to do that because it's a momentum type trade. Just looking for that. I guess it's a triangle type formation. Technicians will probably agree that's correct. You've got the triangle and then you've got the burst. As you probably know, I don't like to use the classical a view on technical analysis. I like to think of how the people are trading and judge it on the price action, and they often do tie in with the classic flags and triangles and what have you, but I don't go out looking for those specifically. But this seemed to set up nicely. Just took that and just took the first half out as we tagged the 87, which was there. I think I got 86, 98 or 99. Just popped over and just hit the market, and just a little few seconds late just to get that pop. But fine, held on. Next exit for me was going to be just before the 87.13 level. 87.12 was my exit. You can see here, if I zoom in on the 3 minute, how key. Hopefully, you can see that 87.13 level was. I drew that in. Before I started trading. You can see how many times we tagged it, and how key it has been. It has been key as well a few days before. Very interesting level. So that's what my premise was. That was my final target for that, and I got the final target, which was great. A nice little trade on that. It then pushed higher. Wasn't involved in that. Excuse me. This was the sort of first mistake for me of the day. I actually made another mistake on the Dow, but we'll stick on oil for now. I took this as a long, and that was pretty silly of me, really. Initially, I was looking for the pop to get short on, and I was looking for this exact move to get short on, for a bit of a retracement lower. That was my premise. That was what I was looking for. I wasn't looking for a long. But then, I started to get myself thinking back to, the action at the end of January and how it could pop, and also the fact the news is coming out and all sorts. So I saw this consolidate near the high and decided to take the long. Now, in actual fact, I could have squeezed a little bit out of that. Could have squeezed a 15 cent, maybe a 10 cent trade out of that. But I was looking for that push higher. We didn't get it, and it pushed lower so quickly it took me out for a small loss on that one. That was a bad trade. The reason that was a bad trade is, look at the situation we're in. We've pushed so much higher. We're well overbought. We're well out of any of the above all the levels. Okay, there was a little tiny pop, the potential for a little bit more. Yes, there was, but was it a good trade? Not really. The better trade was taking the fade, especially when it failed that time, and started to push lower. And actually, interestingly, the tape gave it away a little bit. Buyers were stepping up. They weren't getting filled. They were stepping up. That was happening around here. You could see large orders stepping up, not getting filled, the market moving away from them, so they move their orders up. They don't get filled, they move their orders up. Eventually they panic and hit the market. That's what you get that little flush for. That started to happen again at that point, but this time when the buyers were stepping up, they were being filled. So that's indicating that someone's taking that taking that demand, and then the balance starts to shift the other way. So that just took me for a little stop, but I'm more frustrated, not necessarily with the stops, nothing, it doesn't really matter, but more annoyed with the fact that I took that trade based on the position of the market. Really, it's a nice little pattern, there's no doubt about it, but really, if that had been down here, it would have been so much better. Down here, the first move is so much better than trying to take it looking for the longer, the final push. And especially we've had several pullbacks before then. So yeah, a bit of a mess up on that, but no damage done. That's the way it is. Last trade for me on oil was this. A good little call, little tape support here. You can see it on the chart actually as well. 86.80, bounced off it a few times. Again, I'm looking for this. I've got time to draw this in. There we go. It's a 50% pullback. It was a nice deep pullback. I think a lot of people shorts may have been caught out on that. A few guys sucked in on that like me, but who hadn't come out earlier. Pulled back to the 50% level, saw some support there, thought that's worth a go. The stop can be relatively tight on that. Volume was dying off though. It popped up, and I just got a little bit a spook with it at 85, and I was out at 80, just over the 87, so it was a 20 cent trade. Really, I was looking for a little bit more of a move back up. This was the sort of area would have been nice back up to here, but again, it's just lack of confidence of having the ability, the confidence to hold the trade, because I didn't feel in tune with the market, especially after making little silly mistakes like that. So those were the oil trades. Because of that, I didn't do any more trades. Missed this 5 p.m. spike. That was an absolute beauty. I really hope some of you guys absolutely nailed that, because that is a gem. Double top. Look at that. 87.77 was the high. Pop through, real good volume. Oh, and look at this 5 o'clock right on the button. Pulled straight back down. Even if you didn't get the top of that, this big selling candle can get you in. Have your stop above there, and hats off to anyone who got that. That was the trade of the day. So hopefully some of you guys got on the end of that very quickly. Coming up to my 15-minute limit. YM took this trade here. This worked out right. It was only a scalp though. Push low, waiting for that first pullback. It's a classical YM trade for me. At the open, actually that was the other thing. The ES, I tried to get fill on this. This little push up, didn't get it, and so missed that drive lower. But anyway, got the pullback. We pulled back to the ticks, pulled back to zero, and got the push to the lows. Took it all out as we revisited the lows, just because I don't know. It was just a case of getting something in the bag, and didn't even feel that pushy really. And also, it's just after that data. The data didn't do anything, so that it was a cue for me to get short on that. Again, this for me was a long flagging type pattern. Just saw there's good strength. It was good strength. We pushed high, we'd push through the highs, pull back to that high. You can see there. I'll just draw this in. We're going over the 15-minute, but who cares? It pulled back to there. It was worth a long. Pushed up, didn't get the pop I wanted. We started to come back and scratch that out for a couple of tick profit. Whatever, waste of time, but missed it. Really, really disappointed again that I missed this trade. This was another little beautiful trade. Didn't quite get the fill. That was the trouble. I was just trying to be too clever with it. After this push higher, I'm looking for that cycle lower, and I'm ultimately looking for a push up to the gap. The ES gap was slightly lower, so the S&P gap was slightly lower. It was around here. Actually, it was about here because we did fill it. So I was looking for that cycle lower on the 3-minute. This is where we are here. This is the day's action here. Looking for that cycle lower. I had a resting order just above that VWAP, looking to get in. Didn't get filled, and it went on without me. That was a nice little push up back to the oversold condition. Just a little bit earlier than my window I like, but you got that one more push nevertheless. Shame, missed it, out of tune. What can I say? No harm done. That's the way it is. I will be back battling at it tomorrow, barring any severe action this evening. So I'll rest and I will review the levels. Great little video this, hopefully, for reviewing. And yeah, back at it tomorrow. So good trading, guys. Hope you did well today, and hope you have done well this week and a few days I've been out of action. Back with another video shortly. Good trading. Keep that risk managed. See you soon.